What's up, YouTube? It's Joe Cacciapaglia sitting on the couch, making some money investing in fractional real estate online, as usual. Today is Friday, so it's time for this week's installment of the 52-week challenge. If you don't know what that is, that's when I share with you all of the fractional real estate that I bought this week and invite you to do the same. You can either jump in the comments of this video, jump in the Discord, there's a thread labeled 52-week challenge, or you can DM me, which seems to be the preferred choice. Please be careful. If you are DMing me, make sure it's me. Find me with the little green heading in the Discord, before you invite me. There are some imposters out there, so if somebody DMs you first and is trying to sell you anything, don't listen to them. Okay, so, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those platforms and any of the properties that you see me talk about. Just because I'm investing in these properties does not mean that you should. Some of them I will certainly lose money on. Some of them I already have. Overall, I'm very happy with my experience with fractional real estate. But, it's something that you just should not go into without really understanding the risks and figuring out, does this fit into your own portfolio? You should never just be buying what other people are buying. Lots of people have gotten hurt that way. Also, in the description of this video is a link to that Discord channel I just mentioned. There's over 270 of us now, people talking about fractional real estate investing, sharing due diligence, sharing, information about how their properties are performing, how different platforms have treated them. People always let us know when there's new platforms, when there's all sorts of stuff. And so I'm just trying to build a community in there. But as I mentioned before, if you do join, there's no cost. It's not a sales funnel. I will never DM you trying to sell you anything, but you might get DMs from imposter me's, and please just report them. All right, so back to what are we doing today? My first purchase was on ARC 7. It is the Austin S2, which is just a single family long-term rental. I've talked about this one before. I bought a little bit around dividend day. I think actually this month, earlier this month, I had a little bit of rewards dollars left in here. And so I just put up, an order for a couple of shares and, at a pretty cheap price earlier in the month. And it happened to go through, I think last Friday is when it actually went through. I do these, basically stop my weekly purchases Thursday at midnight, whatever I haven't, or by the time I'm doing this video, which is usually, sometime after midnight on Thursday. So, stuff I bought Friday, I count in this week. So I think I only bought 2 shares of this one this week. It is, when I talk about it, it's very low yield. My yield is significantly better than this because this is based on the current last traded amount, and I bought it for a decent discount to that. This is a property where I'm happy to take a lower yield because at my purchase price, I think I'm getting a very big discount to the real world value of this property. So when we eventually sell the property, I expect to get a pretty big pop in my return from that. So I think that even at this current market cap, it seems to be trading below, or the current market price, it seems to be trading below what I believe the real world value is. But at the even further discounted price that I bought it for, I thought it was a no-brainer. Yeah, I bought 2 at $20. So, my first order was at $21.90, and then I bought some at $20. Now I've got, or $21, and now I got a couple at $20. Really happy with that price. Austin's a market I believe in. It's long term. It has had several tough years since about 2022. It's been on a downward trajectory, only because it went straight up for the couple of years before that. This is a market that I have good data in because I have MLS access. I could look at, prior leases and the, history, how quickly it took to lease this up, had a better sense of comps and whatnot. So that's why I was happy to buy this one, even though it is just extremely low yield. I think my yield on it is I think it's over 3%, but still, it's very, very low. I think I'll make my money on the sale on this one. And sometime in the future, I think there's a decent chance rent growth will start to happen again. If you're not familiar with what went on in that market, there was a lot of apartment buildings put up and the rent prices came down, right? Lots of building, more supply. Even if there's similar demand, price goes down, right, for rents. I don't think, I think over time that's going to get absorbed and we'll start to see rent growth again, because it was a market that had tremendous rent growth for a very long time. And so if that happens, in the future, we'll get, we'll start to see some more a higher yield as well. That's one of the things. A lot of times, I even fall into this trap. People talk about yield versus value. I like to always say yield is temporary, basis is forever. But the other thing is yield is temporary, right? I'm getting a low yield now. This could become significantly higher. A lot of my personal investment properties, when I first bought them, didn't have tremendous cash flow. But because I selected properties in areas with high demand, the right sorts of, looking at the demographics that are supportive of rent growth and appreciation, but specifically rent growth, oftentimes it only took a couple of years to start getting really great yields on properties that had just okay yields in the early years. And so that's another reason why I'd be okay with selecting, a lower yield in a market that I think is going to do well long term, because I don't think that yield is necessarily permanent. Anyway, that's the only thing that I bought on ARC 7. We'll see how it turns out. I didn't put a tremendous amount of money into this one, but I also, because I'm utilizing like the dividend day bonus shares, and I think the two that I bought had a little bit of leftover from that, and then also I got a $30 referral from somebody, so thank you for using those links. Getting sort of like especially the bonus money. I mean, that's available to everybody. Not everybody's going to refer as many people as I do to some of these platforms, but it is, it's boosting those returns even more so, right? I already think I'm getting a decent discount, plus getting the additional free money on top of it makes it a no-brainer in my book, especially relative to the other properties that were available on there, because I don't only want to load up on the few that I already had, trying to widen my diversification even just on this platform. All right, the next thing, ground floor. This is going to look pretty similar to most weeks. If you're not familiar with this platform, this is actually fractional debt. These are pieces of mortgages, and that's, the piece itself is their LROs. Their stands for limited recourse obligation. I only bought one this week. Only one was offered. I actually am starting to have some cash accumulate in here again. I had one payoff, had one purchase, and have still have 107 total loans. Love to see that number grow, but it just hasn't been. These 15 extended loans are still sitting here, and these are all the ones I went over in an earlier video. Many of those, when I read through them, look like they just should be listed as default, like in default, not an extended. I mean, some of them, they say, oh, we're starting the foreclosure process. I don't really understand why they're stuck like that, although some of them do say they're expecting payoff soon as well. So no real movement there. And like I said, until I get a good sense of what's happening with these ones, I'm not going to keep putting more money on here. I'm just going to continue to reinvest what I have. You can see I've had a ton of extended loans pay off in the past, but this is, a big chunk of my current portfolio just sitting here. So because I don't understand what's going on with it, why they're not getting moved to default, and also why some of them are, they're all from 2024. I think almost all of my current extended ones are from 2024, where many of these that were extended and paid off are actually later loans. So anyway, still relatively happy with this platform. If it weren't for the fact that I was putting such larger amounts, like right now on average, I'm putting $100 into every loan. A lot of these loans were $400 plus, and so that's why it ends up being a big part of my total investment, even though it's a small number of loans. If I hadn't done that early on, I think that my portfolio would look a lot better right now. But I did. That's what I always tell you. I'm trying to make these mistakes so that you don't have to, right? Hopefully you're learning from my mistakes. If you're new to ground floor, I think it's, the way to go is to just put the same amount to each one. What I was doing is I just had big chunks of, I was moving like 5,000 on at a time, and I at one point had moved up to over right around 15,000. I've taken some off because I wasn't able to reinvest it all when they did this artificial payoff. But I was just, whenever I put money on, I would just buy whatever LROs were available instead of, and at some point I was thinking that maybe I would put that much on every month. But I don't trust the platform enough to do that just yet. With a lot of these fractional platforms, when I first got involved with them, I thought I was going to be moving a lot of money into the fractional space. But I've decided to just cap it and let it really be an experiment for now. Because overall, a lot of these are just, there's always hidden risks in them that I've uncovered. Now, ground floor, it does have the longest track record, so I don't really think that there's a ton of unknown unknowns on this platform for me right now, especially with the LROs. I think their flywheel portfolio is another story. But in general, I think if I'm just continuing with my current strategy of just the same amount in every single LRO, if I ever get to a point where there's significantly more that are available to invest, I'll add enough money to where I'm buying them regularly. But I think that, at some point, maybe move the amount up in each loan if I get to a comfort level where I want to really, start putting some real capital to work on this platform. And then the last thing, I only made one purchase on Lofty this week. It was, I don't even remember, it was probably only 4 or 5 shares of this, or they're calling them shares now, I think, on Lofty. They switched the token language. But 9 Country Club Lane, you'll notice it's a new picture, but it is the same property, right, that I've been buying several times, over the last couple of months. It's a short-term rental in Briarcliff Manor, New York. It's the one that was, and I think it has been now featured on Staycation. We'll see what that does for the business. There is right now one really long stay booked, apparently almost 3 months. I think it's over $65,000 for that one booking in top line revenue. I don't think it had any relation to the show coming on, and I'm hoping that it doesn't get in the way of maybe higher price bookings that we could get from there. I don't know, but anyway, it's in my mind, it's a very, it's a really nice looking short-term rental. Earl's running it. I think that he's someone of the people who manage properties on Lofty. I'd say he's one that I trust probably the most. He has the longest track record, and he's, shown that he can handle a number of different situations. This is probably the nicest short-term rental he has on the platform. And I mean, it's just been being sold at what I think is an incredible discount. I mean, it's, originally was brought to the platform at $50 per token. I thought that was way too expensive. But I thought I thought 35, 40, maybe it would make sense. But now being able to buy it at 19, I think it's going to be really hard to be hurt with it. And I think over the long run, it's a property that we should be able to do fairly well. And that's what I'm always looking for on Lofty, right? Because I am very nervous about their platform overall. Although lately, I think they're making a lot of moves in the right direction. Not all of them are perfect, but I think there just seems to be a lot more listening going on their part and reacting, and giving us both new features that I think make more sense, but also just slowing down and not just trying to pump out new properties and features, but trying to fix, a lot of the stuff that has been a problem. And so I like that new focus. It makes me a lot less nervous, but there are still just, in my mind, a lot more risks on this platform than in many of the others. Or it's harder to uncover them in certain instances, or to, there's maybe even a weirder problem, but harder to ascribe blame, right? Like if something goes wrong, there's a lot of finger pointing that goes on every time. Is it the manager's fault? Is it is it something that we just as the investors should have done something about? Is it Lofty's fault? And so sometimes, and nobody, one of the problems that happens over and over again is nobody has a large enough stake to really take charge and fix things sometimes. And I think that's a risk that we have on here that you just don't see on most of the other platforms, because they're run, it's the company itself, like it's Arc7 themselves, or, that's the one at the end of the day responsible, versus, oh, hey, you're both the product and the customer, right? If you're on Lofty, because it's our job to fix things. Anyway, whenever I talk about Lofty stuff, I get into this weird, because it is, I continue to buy stuff, although I have been still moving money off the platform, but I reinvest. Basically, when I sell some tokens, I've been reinvesting, and I reinvest my rent. So I'm not completely exiting the platform, but I'm being much more selective in the opportunities that I am investing in. I actually have a bunch of limit orders up right now. I'm trying to get out of several properties or several DAOs. That I just don't, it's hard to make long-term investments on this platform, because, I have to like the market, like the property, like the property manager. And then even if all those three things are perfect, I have to trust that Lofty is not going to do something to screw it up. And I do think that with, the way that it seems like they're slowing down, going back, really trying to fix things, make sure things work right, that hopefully that doesn't continue to be a concern in the long run. But you just never know. It is, they've made so many quick changes in the past that led to new problems that they didn't foresee. And so that's one of my big worries always. If I'm trying to make a long-term investment, I don't want, this changing and experimentation within my investment, right? So anyway, that's all I'm going to say about that. And that's everything that I bought this week. I didn't buy anything on Mogul. I didn't buy anything on Arrived. I didn't buy anything on Collab. I'm no longer buying stuff on Sol's Law. I think we've talked about that quite a bit. They're not putting out anything new. Still just waiting for redemptions there. I didn't buy anything new on Real Bricks. So, not a ton of purchases. I think probably next week will be a lot better because... Well, one, I think I'll get some new Arc7 stuff because, maybe that'll be the week after. Who knows? I never know. These things always surprise me. Sometimes I actually have to go back and look at everything because I'm like, oh, did I buy anything this week? Because I'll have orders out and I'll have gotten an email, and that's what happened with both the Arc7 one, and I wasn't sure that I had bought some of this one. I had to go back and check. And that's why I have my Lofty Assist open. I use my wallet scan, find my purchases, and then just pull those up. So this was the only one. Anyway, that's it for me for today. Until next time, I'm just going to keep making mistakes so that you don't have to.